Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Valerie Teitel on the kickoff of big bank earnings season. Valerie, let's start off with JPMorgan Chase, because it seems like investors are trying to work through how they feel about these results. Good morning.
Good morning, Nathan. Yes, the market is still digesting these JPMorgan earnings. The share price has been all over the place, up as much as 1.3%, down as much as 1.1%. But at the moment, we are down 0.3%. And this comes after a broadly strong earnings release. They bolstered their full year net interest income guidance. They also had some pretty strong trading revenue, beats in both equities, coming in at $3.3 billion versus estimates of just north of $3 billion. And fixed income also a beat there, coming at $5.6 billion versus estimates of $5.3 billion. Investment banking revenue also came higher than anticipated. They did, however, book some slightly stronger provisions for credit losses, so that came higher than expected, and that's of particular focus after the bankruptcies of Tricolor and First Brands. Diamond also having some decent things to say on the U.S. economy, saying things remained generally resilient. That's critical here as we're in a data vacuum when it comes to data on the U.S. economy, but he did warn of heightened degree of uncertainty and says he does see some signs of softening, particularly when it comes to job growth. So JPMorgan investors still digesting this report. Shares are down 0.7%.
Yeah, I thought you just said they were up 0.3, but that, in any case, let's move on to the other bank that reported so far this morning. There seems to be a little more conviction around Wells Fargo's results.
A bit more positivity around Wells Fargo. Shares are up 1.7%. They boosted a key profitability metric, and that comes after the Fed's asset cap has finally been removed after near 7 years. They raised their return on tangible common equity, also known as ROTCE, to 17 to 18% versus previous guidance of 15%. Their net interest income came in slightly light, but they did confirm full year guidance on net interest income for the full year 2025. Provisions for loan losses came in lighter than expected, and deal making revenue coming in strong.
And we also got some news this morning from General Motors, maybe not the news investors wanted to hear today.
Yeah, this one's a bit disappointing from General Motors. Shares are down 2.4%. General Motors is realizing a $1.6 billion charge as it realigns its product range away from EVs. It expects the adoption rate of EVs to slow, and this follows recent policy changes, including the end of EV tax incentives and the reduction of stringency of emission regulations. The company is reassessing its EV capacity and manufacturing footprint in that space, and that begins with realizing this loss of $1.6 billion, with GM shares down 2.4%.
And just time, Valerie, to move back to earnings, but not just the banks. Big Pizza is reporting as well.
You did hear from Domino's. Those shares are up 3.5%. Some decent sales numbers here. Their U.S. franchise particularly strong, especially for stuffed crust pizza, shall I say, in the U.S. There's also some other pizza companies in the news. Papa John's, the stock rose around 10% yesterday. It's up another 2.5%, and this is on the back of a report that Papa John's has received an offer from Apollo Global Management at $64 a share. It comes after speculation has been rife in this stock, as shares have down 65% from their 2025 high.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.